What's up, YouTube? It's Brendan from Market Makers, your home for Wyckoff and Advanced Fibonacci TA. What a roller coaster ride it has been these last couple of weeks. The TA has been playing out to a T. Have an important announcement. Our Market Makers website is up. It is marketmakers.trade. The link is in the video description. If you go check out the website, guys, it helps generate traffic. Would really appreciate it. And if you decide to join the room and get more of our TA and get our education system as well as a fantastic community, then we provide you with a discount by joining through the website. So definitely check that out. And of course, our Twitter is also in the video description, as well as BitGet if you want to trade these markets. Guys, the last 2 weeks, we have walked everybody through each step of how this pump would occur in Bitcoin. And of course, on Saturday in my marathon video, predicted the pump for the upcoming week because it is quarter ending April 1st, and all the hedge funds, the big financial institutions are going to be holding positions. They have to disclose those positions. And then April, just predicting in a macro market here, I think April could potentially be a very bearish month if all these markets start topping out. We have retail rallies in every single market. I want to show you guys that in the charts because the markets were up again today, but Bitcoin is still at its top, okay? It's still at its top that we predicted. So on Saturday's video, I told you the markets would pump. Sunday, Bitcoin pumped. Monday, the SPX and the NASDAQ pumped. And then today, Tuesday, the Russell pumped. But Bitcoin's still sitting still. So let's go ahead and get those projections again real quick. And I saw the comments, people saying I had a crystal ball. Really, this was just based off volume divergence and the key fib, okay? The key fibs here are in yellow, 61811, So when I saw this pump candle and I saw the volume divergence occurring, as you guys know, with our pump candle being such a small candle on a daily volume, no relative volume, no nothing. I'm going to explain volume divergence. That was a common question in the comments, but I can't write 4 paragraphs on YouTube, guys. So I'll show you here on a couple of charts, okay? So I saw the volume divergence. I saw my key fib. So the 48,266 is at the absolute top. It doesn't have to be, guys. The market can move up when people come in and buy. So if people decide they want to be bullish on Bitcoin, whether it's institutional money or retail investors, they can move the market up. But as you can see, 2 days now, we are at the 48,266. We are above the 233 and the 144. And again, just to make you guys aware, if you didn't watch that Saturday video, but just be aware of this move that we did in June, because again, we went over this in yesterday's video. We tried this in a bear market situation. We got above the 233. We held it for a few days, and then we declined 12,522 points. Doesn't mean that will happen this time, but the macro outlook of the markets, to me, even though they're all rising up, see, it's you have to think contrarian here. Even though they're all rising up, there's a lot of indicators flashing that they are massively overbought, and it is a retail rally, okay? So we're not going to spend a lot of time on the daily because not a lot's changed since yesterday. I want to give you guys fresh information, okay? Let's go ahead and look at the 4 hour. Again, 4 hour, beautiful setup. But as you can see, we're starting to roll over to a top. And remember, I told you in yesterday's video, be very aware of making shapes, right? Be very aware of making shapes like double tops and things and then getting a downtrend from that. So that's always a possibility to be looking out for. But 4 hour looks very healthy. The daily looks healthy other than the fact that you're hitting that resistance level and you're not challenging it. So what will it look like if you do challenge it? Well, let me show you this, okay? Because remember, sideways markets doesn't necessarily mean it is distribution. It could be reaccumulation, and you could be accumulating to make another move back up. I personally don't think that's what the market's doing, but it's a possibility, okay? So let's look at it. So if you look at your different indicators, one thing you want to see is volatility compression, right? I use the ATR for a lot of that. And then, of course, I'm looking at the volume, and I'm looking at the larger time frames like the daily, okay? I want to see breakout volume. I want to see accumulation. I want to see volatility tightening, and that's how you get these moves up. It's very important to understand that trading with volatility. So the 4 hour time frame looks very bullish, but let's go to the 1 hour. Let's go to current trend, okay? 1 hour time frame. Now, again, when we were pumping up here, I said, hey, you know, we're going to be making a top based off the volume divergence. And look what we're at, where we're at now. So let's go ahead and box this in Wyckoff. We have our buying climax candle, which didn't give us much of a wick. Usually you want to see a wick 25 to 50% of the body of the candle like this. But the trend kept going. Remember, crypto is the most volatile asset class on the face of the earth, okay? So you got to make some allowances here. And then we have a reaction here with the selling, okay? This is our automatic reaction. And you can see this is how Wyckoff works. I'm going to walk you through this really quickly. This is a mini cough, okay? This is just current trend, and we're going sideways. The market moves sideways in stocks 70 to 80% of the time, and in crypto, it's probably less. But in stocks, at 70 to 80% of the time, you're going sideways. So understanding the steps is key in looking for breakouts and breakdowns. The way the market works via Wyckoff theory, this is just a quick class, okay? I do teach Wyckoff in the room as well. But you enter the sideways market, you have a buying climax candle, you have an automatic reaction dropping the market. Here we have a down thrust, which leads us to an action, a reaction, okay? Remember, I told you the rubber band theory. Pull back the rubber band, you snap up. Then you exit the trading range with up thrust. This leads to a sign of weakness, which was so weak, so volatile, you got down thrust again, and you get chop. Exit the trading range with up thrust, sign of weakness, you get down thrust again. And people are going to say, okay, how long does this go on for? Well, Russell did this for a year. Last year on the daily time frame. It's not going to do that for Bitcoin, but on the daily time frame, it lasted for a year, going up and down, highly volatile market. But it's easy to, not easy, but it's fun to trade because you can make money on these swings, right? So a couple of things here to note. What are the key steps to breaking out, other than looking at your indicators, which you have, whatever you guys are comfortable with, tracking volume, tracking volatility? If you guys are RSI traders, LA wave traders, however, it doesn't matter. But when you look at this, what needs to happen via Wyckoff is one of these clusters. When you get up towards the top of your trading range, even right here, you want to get some candles that hold support, usually in a cup type fashion, okay? And you get accumulation in that cup, and then you get your next sign of strength, okay? That's how you get these pumps. This would be your last point of support in LPS, very similar to this, okay? So if you look down here, again, you hear me talk about this all the time. There's some common TA principles like higher lows, right? Higher lows in trend, and this is a 1 hour time frame, but you guys know I was showing you this on the daily, just constantly making higher lows, looking at your indicators, and I bet you there's probably indications here that this pump was coming. I mean, you have your breakout candle here in volume. Again, this is what you want to see on a breakout candle. High, big volume bar. Remember, smaller time frames, not as powerful as larger time frames. High relativity, okay, relative volume as well, relative volume breakout. Accumulation went straight up. You see that? So your indicators tell you these things, and of course the ATR gives you a big spike in volatility. Volatility is a separation of candles, okay? When your separation is close together and you make a baseline, this is how volatility traders trade in Forex, okay? Because again, that volume is not that reliable in Forex, so we use a lot of volatility indicators. This is how you find big moves in the market. And of course, this is my volatility channel, which is a great visual reference. I mean, just look at the Easter egg explosion here of the channel from the bottleneck to the explosion. So there's things here that gave you this indication this was going to happen here on the 1 hour time frame. And you'd be looking for similar items. You'd be looking for volatility compression, holding a key support. Remember, the higher low basic TA principles that you guys learn, but understanding that structure of what you're doing, you're trying to exit this Wyckoff trading range with bullish accumulation, holding a higher low, looking at your indicators for an explosion. Conversely, you have a dump that can occur when you start going down, making these down thrusts like this. Okay, you make a down thrust, but the reaction might not be as strong. So if this came back down, let's just say it rolled down, you make your down thrust, you come up a little bit, maybe get in line with some of these candle clusters here, okay? And then you roll back down, you make a deeper down thrust. You're doing the opposite. You're making lower highs. You see that? And then at some point, again, you look at your indicators, you start seeing red candles, you might get a pump up. The market likes to move up before down and down before up. You see it right here. Look at this. It rolls over to the side, it goes down and selling, then boom, explosion, okay? In this case, it's drying up of supply. This is supply being dried up and then an explosion with volume. So it's the same thing, but in reverse. So those are market moves you're looking for when you're trading Wyckoff on the 1 hour time frame, okay? So right now you are making a top, but even in 1 hour time frame, you're making patterns. Now this pattern, this was forming when I was sleeping, but let's go ahead and look at this. Take this pump candle to our swing high, swing low, swing high. Combining Wyckoff trading method with patterns is such a beneficial way to trade. This is how a lot of the guys in the room love to trade. This is kind of what we teach in our room, the market makers method of trading, okay? So you have a bearish pattern here for a double top, and you got a nice price decline here. If I grab my price tool, we'll see what this is. This looks like probably about 1,000 points or so. and 1,003. Okay, so that's a nice scalp. For those of you that like to trade smaller time frames, you can learn these techniques. Understand where you are in Wyckoff. A down thrust should lead back up to an upwards test of your ceiling. In this case, got an up thrust, and now you may be pulling back down again. Rubber band, guys, back and forth until one force wins, supply or demand. Now let's look at the markets, because the market's pumped. Okay, so let's go ahead and look at this. So the Russell, I told you this Russell pump was coming. And again, this is a very clear indication of Wyckoff. This is what I'm talking about, the higher low. Let me go ahead and get rid of this pattern so you guys can see this better. I want you to understand this principle here, okay? So you have your base from your selling climax candle. These are wicks that you like to see. Everything's cleaner in the stock market because it's less volatility, specifically in the indexes, right? So look how clean that is. It's a demand wick there on that candle. So you see that selling climax, it hits a demand zone, boom, pushes the wick back up, and now you have a reaction coming back down as well, okay? So you have a reaction from the bottom, reaction to the top. We have our ceiling, and we test the bottom, rubber band back and forth. And this is trying to form several times to try to form a higher low of area, a higher low of support, as you can see. And it forms an up thrust, and with up thrust, you get signs of weakness. You see this? And it tried to come back up. It tried to hold this area, and you just got a big sign of weakness, which led to a down thrust, which pushed you back up into the market. You're getting the gist of it, I think, but I teach this in the room. And so what happened here is, once again, we have a down thrust, which at the reaction to that is to go test your ceiling again, but this time you were able to hold your higher low for multiple days here on the daily time frame, and you look at your indicators and you got everything you needed to see for this pump. Okay, so everything you needed to see for this pump. You had a volatility channel. You can see your volatility channel was compressing daily time frame, and then it expanded. You see this? It expanded out. You have your ATR, which was descending. Okay, your ATR descended. So you're looking for these moves in the marketplace when you're looking at the daily time frame. And of course, you had your volume, which again, though, this is in every single index and in Bitcoin, okay? Right now, this bar is still open, but this is not a breakout volume bar. This is low. It's below the 21-day EMA. Hence, weak hands are pushing up the price, okay? We went over this the other day as well, but this is why you have a bar that just got to your test, your resistance here of the 144 and 233. And again, if we go ahead and get some price predictions on this, can kind of tell you where this is going to go. Not that any of you necessarily care where the Russell goes, but you should, because Bitcoin tracks so closely to it, okay? It got to the 113. This may get to the 1272 at 2153, get some wicks above and make some type of shape, a double top, or you may see a reversal. Again, I'm really focusing on the rest of this week, guys, because the markets can be pushed up. It just depends what retail wants to do. And of course, if hedge funds, if other big money comes into the marketplace, you will see that as well reflected in the price. But for right now, and this is a very clean example of volume divergence. This is the SPX, okay? This is your all-time high up here, January 4th, so you're not that far away. You have had a great price ascension here. Let's go ahead and measure this so you can see this principle. So I'm going to show you volume divergence. Just from here, you're at almost an 11% move on the S&P. This is a big move for an index, okay? 11% move. So you have clear price ascension. I think we're all in agreement here. Clear price ascension, right? Look at your volume, though. Your volume did nothing but decline and flatline as price went up 11%. Okay, that's volume divergence. You hear people talk about RSI divergence. Oh, I have bearish divergence on the RSI. This is bearish divergence on volume. So retail can push the price up. There's no limit to where they can push it up. And of course, if bigger players come in, they can push the price up even higher. But right now, what I'm seeing is a divergence between price rise and volume declination. None of the bars look like this here on the daily time frame. This shows big players in the market, high volume, high relative volume. That's what you want to see for a sustained trend. You want to see some type of breakout candle on a sustained trend. The remaining candles on a trend don't have to be as tall because you have to get the velocity. Think about it like rolling a ball downhill, okay? You're rolling the ball. You need a big breakout candle with relative volume to really get the speed going. Then you can have smaller candles that keep it going, okay? That keep it going, but you need the trend to be established. This is not a trend being established. This is retail. This is weak hands in the market buying their favorite stocks, which right now or at an extreme discount. Now, all of this is important for people that are new to the channel, because I know we have hundreds of new subs. It's important because Bitcoin tracks to the tech sector. Okay, so this is very important to understand. And I want to show you guys this one more time on the NASDAQ, which obviously is heavily in tech, just like the Russell. So when you look at this volume divergence, well below the 21 EMA, okay, and look at your price rise. And this is like a 15% move in the NASDAQ, okay, 15% move, and you have nothing but lower buying volume all along trend, especially from your peak here, okay. So from your peak here, volume divergence, price goes up 15%, hitting the median line in our trend channels where you're finding a resistance. And of course, if you throw Ichi on and things like that, you would see that you're in the middle of the cloud. These are all bullish things. So I know a lot of people have a difficult time wrapping their head around, but you're showing me really bullish things. Prices going up. Again, it's the macroeconomic space, guys. It's the highest inflation now since World War II. No single year has had higher inflation than we have now since World War II. So it's the macroeconomic space. It's just my experience of working in an investment bank as well for 13 years. So they're going to be looking to put money into growth, or into value out of growth, and that's going to be happening in the month of April. Our fib time pivot date is April 1, as you guys know, across every single index and across Bitcoin as well. So that's why I'm looking at April 1st to be a potential beginning of a new trend, or maybe the signal that we have a top in the following candles would be the beginning of the trend, okay? So many people on YouTube think when you hit a fib, that's it. It's a reversal. That's not how fibs work, okay? As you can see, you can pump through fibs. Yes, they can be resistance, but you can also pump through fibs. They're also support. It's a potential layer, or it's a potential area where there's support, resistance, and reversals can happen. So when we lay out our fib time, that's how we got that April 1st date in every single market, which happens to be the beginning of the new quarter. And so that's something that we're paying close attention to, and just to see what happens here at the trend. But there could be more upside to the markets, and maybe more upside to Bitcoin as well. But here you go, April 1st. So that's what I'm watching, guys. The next couple of days are key. We'll see if Bitcoin wants to accumulate and test this, get some volume compression, maybe push up higher. But as of right now, it's holding the top that I predicted in yesterday's video, 48,266, okay? Let's go see what Ethereum did. Ethereum came up and tried to test the next fib, and now it's pumping up a little bit more. So Ethereum's acting a little bit more bullish right now than Bitcoin as well, which is interesting. So we had our first target hit, we had our pattern, caused some retracement, and now we got a little bit of pump up. Maybe Bitcoin will do something similar and try to pump up past 48. I know guys in my room, girls in my room would definitely love to see 50K, 55K. Anything is possible. Anything's possible. It's all about probabilities and likelihood, okay? So that's what we're looking at. As you guys know, I long Bitcoin. I long Solana down here in accumulation. So I got out of Solana when it hit my target right here at the 233, 144. Maybe it'll go higher, but I think it has a ceiling. I like to sell in the strength. Solana was really struggling while Bitcoin was pumping, so I'm actually really happy that it got to where it did, because I wasn't quite sure if it was going to get there. So what do we have? XRP did go up a little bit more before it hit a nosedive again. So this got to 91 cents. Again, XRP kind of disappointed me on this. Super bullish setup. I was expecting more of an Ethereum type reaction, come up and test a key fib, at least get to 98, 99 cents. And I had that $1.07 target that I wanted to see for XRP. And guys, I think that's pretty much it for the video. Let me show you the DXY, because the DXY was dropping as the markets were going up, okay? But again, with the Fed rate hike coming in at 0.50, you should see the dollar strengthen. The dollar has been on an incredible rise. As you guys know, we trade Forex, so a lot of this has been affecting the Forex pairs heavily. It's been on an incredible rise ever since May of 2021. It's just been going up and up and up. And so it is going to continue its rise as the Fed raises interest rates, and then at some point, that also will hit a top. All right, guys, hope you enjoy the video. Please smash the like button, subscribe to the channel, and as always, I will answer your comments. Definitely check out marketmakers.trade and check out the information we have in the video description. Follow us on Twitter, and I love to talk to you guys, and check out our sponsor, BITGET. Really appreciate it. Thanks, everybody. Talk to you tomorrow.